Okay, good afternoon. It is Tuesday, August 23rd, just right afternoon here in New York City. I hope everybody's having a wonderful day. Hopefully, you all had a restful weekend. So, we're seeing follow through in the market. We've been anticipating this since June. We've talked about, hey, we might see a bear market rally. We're gonna buy put spreads. We talked about this in June, right? Here at Checkmate Trading, and yours truly here, Mickey Blindside. I always like to focus not just on my wins, but also on the mistakes that I have made, okay? And I think that's where we have our biggest opportunities for growth, analyzing what we could have done better. This is what we could have done better. And I've said this in previous episodes. If I could go back in time and talk to my younger self and speak to my younger self and say, what's the most important things in trading, I would have said discipline and patience. Okay, and that's what happened. We had a plan. We had this plan in end of June. Go back into the high noon highlights. It was like that last week of June. I said we're gonna buy puts on either QQQ or IWM right as the S&P 500 gets to 4,300. Okay, that's what I said then, and I should have stuck to that plan. I should have been patient and not FOMO'd into some puts. But it is what it is, okay? But we are seeing that follow through. And right now, our QQQ puts that we have put on have about a 30 to 40% gain already. Some of our other spreads are either at break even or at very small losses. We shall see what happens, but I do think that this follow through has some legs, or this sell off. Now, that doesn't mean we're going to go all of it at once. Some of you bought some puts last night. We saw a little bit of a turnaround Tuesday, but now we're getting a little bit of a Frankfurt fade. This is something that we talked about in the Discord, where in the last couple of weeks, we have seen selling overnight or in the morning, and then we see buying happening after Europe closes. Well, today we're seeing the opposite. We saw buying overnight and in the early markets, and now we're seeing the markets fall, okay? And I think a lot of that buying came from European investors, as evident by the price action and the euro and the dollar. Today, the dollar started much lower. The euro started a lot higher. I just think it's probably because of the demand, on maybe the slight risk on positioning today at least, from European traders. But okay, so the important thing is, let's go over some of the other happenings. Well, let's go over the indices first. IWM only 0.21%. We were I think we were almost up 1% for the day earlier. QQQ, at one point we were up about 0.5%. Now we're down lower. And SPY, are we at break even? Oh, we're a little bit under break even. This morning I also entered a trade into ARK, some ARK lottos, just so you guys have peace of mind. Here you go. There it is, 39.5. I bought them for 9 cents. I had a small order, and I only got a partial fill on my small order. So it's a really, it's almost like negligent. But, I saw a lot of the Cathy stocks saw distribution at the top. After about first 30 minutes of the day, I noticed that there were some big sell orders coming through on a lot of these stocks, the Cathy Wood stocks. And that's what prompted me to take the ARK puts. I think some of you all bought puts because of moving average touch or something like that, which prompted me, and again, you guys know how I feel about TA or technical analysis. It does have its place. I just think most people use it incorrectly. Most people rely on it way too heavily. I think it's good for timing. I mean, it's good for risk management. I like the risk management part of moving averages the best. Other than that, I just like to use it for my risk management levels. But as far as like certain moving averages, you can put a higher weighting of, or you can place bigger trades at certain bigger moving averages. I don't know about that. I don't know about that theory. I will back test that, but that part sounds a little dubious to me. But definitely for risk management and for certain entry timing, yeah, I think it can definitely work. And this morning, I did a little back testing myself on some moving averages. So that's something that I wanted to go over today with you guys. So one of the things, let's start with the Big Daddy index, SPY. SPY is like, the most quality index out there. I have a new chart, moving average chart, okay? Actually, you know what? Let's go ahead and start with QQQ since we're there, okay? So triple Q. So what are the moving averages that I found that work very well? Just from initial look over, and again, this is just for the past, just for the year to date. So what is that? 8 months? I only tested it until year to date. I just eyeballed the rest, everything beforehand. I didn't have time to back test it all the way through, like, a couple of years. So I just did year to date, and I just filtered out for times where it hit and where there was pivots throughout the day, and there were certain moving averages that came out as places where we see either reversals or we see some type of signals happening, either in the options market or whatever. And so I think in the QQQ, what really works is the 125 simple moving average so far, year to date. Okay, year to date, the 125-day moving average has corresponded to big reversals in like the options market. Right here, we saw options hedging happening, and really where we saw call chasing stopping. It stopped right here at that 125-day moving average. Also, too, we saw here a little bit of a pivot. We saw in this bear market rally right here, since June, July, it had a slight pause and it retested the 125-day moving average. Of course, it went down. It was a fake breakdown, and then it went back up again. And then today, even to the tick, it tested the 125-day moving average. So it seems to be that this is a thing for now. And again, I'll use it till it stops working. Okay, I'll use it till it stops working. So if we revisit that, maybe it's worth another short right here, short term for you day traders out there. Me, I don't sit in front of my screen all day, although it may seem as such. I do a lot of other things during the day too. And also too, just from my own notes that I take on my own trading activity, I have a diary and I have a P&L report that I make for myself. I just noticed that when I focus on the bigger, weekly, monthly moves, I tend to make more than when I start doing quicker trades. However, having said that, I still think in the future, maybe if we have a bigger sell-off in the week, maybe if we do a retrace, yeah, maybe I might buy a little bit more puts here. I'm not against that. I think this 125-day moving average is a thing. Also, too, one thing I noticed is this one right here. I believe this is the 9-day. The 9-day EMA. The 9-day EMA also tends to be a good short-term area. It's a good place to judge whether or not short-term momentum stays or goes. So as you can see here, usually if we have short-term momentum and it runs away too fast, it usually corrects to that point and then comes back. Okay, here the market structure changed. Right here we saw TIP TLT go up. We saw what else? The bond market signals, all our currency market signals, also options market signals with all the call chasing stopping. So that corresponded to this line right here, the 9-day EMA. All right. So it seems to be that the 9-day EMA, all right, and the 125 SMA are pretty influential on the QQQ. All right, pretty influential on the QQQ. actually just eyeballing this. This was based on an actual back testing, okay, with software. If you look at anything before, hey, it seems to work. That 125 day seems to work. All right. You know what else works with the 125 day average? You know what else works that I found out, which I think is quite interesting? I think it was Ethereum that worked with the 125. Hold on, give me 1 second. Let me pull up my Ethereum chart because here on TOS you can only get the Ethereum futures contract rather than the spot, and I think this worked more on the spot. With futures, there's that carry trade, the interest carry, and so there's sometimes and contract rollovers. So sometimes you see these big gaps. Let me see here. Was it the 125? Here, I'm just pulling it up for you guys on TradingView, and I'm going to move that over here. I think, yeah, 125, it worked. It overshoots it. I mean, of course, Ethereum is not, the liquidity in Ethereum comes and goes, okay? So it's not like as liquid of a market as QQQ or SPY. And I think something like this is going to work better and two-sided markets in when it's when there's actual liquidity. Ethereum, especially around here in the beginning of 2022, and right here, there was very low liquidity in crypto markets. But look at this: the 125 seems to have some sensitivity, or the chart seems to have some sensitivity to the 125-day moving average. Not only for QQQ, but also for Ethereum. All right. If you just looking back, seems to be a thing. 9 EMA, is that a thing? Short-term momentum. Yeah, look, short-term momentum, same thing. So short-term momentum, 9 EMA. I mean, and it kind of makes sense, right? Because crypto has been kind of moving like a leveraged QQQ, or even better yet, like kind of like a leverage IWM. But IWM, QQQ kind of have that relationship where they're very liquidity sensitive and they're very interest rate sensitive as well. Okay, it just so happens to be that IWM also has, but has a little bit more sensitivity to junk bonds as well. But it's not very surprising that something that works on the QQQ, like the 125 SMA and the 9-day EMA, works also in Ethereum. I'm not very surprised at that. Here he lost his short-term momentum, boom, and then look at this. I wouldn't be surprised if downward momentum takes over in the Ethereum market. I wouldn't be surprised if it goes up to here, touches the 9-day EMA, and then goes back down. Of course, that's a shorter-term trade. That's something that I won't do just because I'm not in front of my screen all the time. But for those of you who are day traders that do this during the day, or are that are more active in front of your screens more, that may not be a bad place to take a short right there. Okay, again, just something that I've noticed with momentum. I would not, for this, if you're going to use this as a short, however, you may want to not put a tight stop. So if you're going to put a looser stop, it means you need to have a much smaller position sizing. Okay, so I wouldn't make this like a large day trade. All day trades should be small to begin with, but even out of your day trades, this should probably be even smaller. Okay, just because you need a little bit of room for randomness. All right, but it does seem to be a level that it responds to, at least within a couple sessions. All right, at least for momentum, when it has momentum like this. Not when it's choppy like this, but more for momentum like that. All right, so if you believe that Ethereum is going to have downward momentum, this would be the spot where you might want to take a short. Okay, just a thought. All right, but a little bit longer term or medium term, I think 125 works pretty well. Okay. All right, next. SPY 125 doesn't work as well on SPY. Okay, however, if I go to in TOS, it's not as easy to turn on and off your MAs. Oops. I need the 100. Show. And then 125. Not show. Okay. 100. So for SPY, for some reason, I don't know why, the 125 is not as good, but the 100 seems to be a decent moving average. Okay, well, not just this. So hold on, let me. It's not just the 100. For SPY, actually has a lot more moving averages that works really well. It's not so much your EMAs. Which one is? So it's actually a 200. 200 works very well, and so does 50, and so does 21-day exponential. What is this? Oh, the 9-day? No, not as much for this. At least from what I saw. So this is actually no. Do I have this wrong? I just did this, so that's why it's not in my memory yet. But anyway, 200 seems to be a very good place. Now, the 200 doesn't always work, but if you were going to use the 200-day, this was your sign right here. Right here, we saw a huge options hedging and also a dash for cash right here. So it could be that is where a lot of institutional desks said, well, gee, that happened over here at the 200-day moving average. Maybe it happens again. And maybe that was the reasoning behind it. But it doesn't work. As you can see, it doesn't work all the time. But it does seem to work. It does seem to be a place, especially when liquidity comes back. When liquidity runs out, like for example in 2020, it doesn't mean shit. It really doesn't. The 200-day really doesn't mean shit if liquidity exits the market. But when liquidity re-enters the market, you can see it responds pretty well. Okay, it responds pretty well. And actually, too, this is actually where we saw liquidity data improve slightly before it deteriorated again. Right here. Remember how we saw. Let me go back to my other chart. That was when on the New York high-low line, if you just want a measure of liquidity, that's when on the New York high-low line, we were doing something like we were doing here. It was starting to curl up, more highs versus more lows. So liquidity was slowly entering back into the market. And so when there's actual liquidity in the market, it responds very well to this 200-day moving average. But when liquidity dries up, especially in January, when there was liquidity scare in the bond market, it didn't respond very well to that. All right. But as liquidity kind of came back and it showed signs of improving, that's when it responded very well to that point and then sold off. And right here too, same thing. Liquidity was improving. All right. New York high-low line, the junk bonds AD line, that was huge. Junk bond AD line was on a short-term upward trend. Remember? Let me pull that one up too. Right here. It was on an upward trend. Okay. Same thing with the March-April. With March-April, we were seeing this little uptrend. It made a higher low, higher high on the junk bonds AD line. Okay, liquidity was improving. When the liquidity improves, these things work. It just looks like from initial look. Okay, I'll back test this even further, but that's very interesting. So maybe that's what we do going forward. Is that we check the options market. Okay, we see what happened in the options market. We check our liquidity data, our junk bonds AD line and our high-low line, and we see, okay, do the moving averages have a high chance of working? I think that would be a great signal, and then we can start using our moving averages as certain timing and risk management levels. I think that would be a good way to incorporate this actually. So I might start doing that. So that's the 200. Okay, so 200 again, it works when there's liquidity. It doesn't work so well when there's a fear of liquidity drying up. Okay, so not even necessarily low liquidity. It was just the fear of liquidity disappearing made it so that it didn't work. But as liquidity made higher lows and higher highs, it worked very well. Okay, keep that in mind. Also, too, instead of the 125-day moving average like in QQQ, the SPY actually reacts very well to the 100-day moving average. Here, SPY had its kind of consolidation period and back test of its rally at the 100-day moving average. Do we see a little, if SPY keeps dropping, will it pause at the 100-day moving average, which is around at 407 or so? Will it? Interesting. I don't know. That would be interesting, though, if it does happen. And also, too, as a short-term indicator, instead of the 9-day EMA, the 21-day EMA seems to be like a good pivot, especially on the short term. It seems to be a place where the market likes to revisit, although it's not as clean. I might have to play around with the length of this just a little bit. Maybe it might be 20 or 18. But again, this was just from like the last 1.5 hours of back testing, just different things. But it seems to be a place where markets come back for momentum. Also, too, another good one is the 50-day that I noticed. 50-day, again, the 50-day works better when there's liquidity. Okay, when liquidity goes away, so like here after it dropped, this was liquidity just got sapped out of the market after that point. That day is when we saw a big drop in the junk bonds AD line right here. We saw a huge drop. If I were to zoom in on this, it looks a lot worse. Of course, when you zoom out of everything doesn't look as bad on a daily level. But this was a big drop in the AD line that day. And that's when we saw liquidity just get sapped out of the market really quickly. We saw that happen also on June 9th. June 9th was that ECB meeting. Remember that? Everything just sold off right after that big ECB meeting, and the Swiss bank came out and said that they were going to raise interest rates to neutral. That was that day, remember? And when liquidity just gets sapped out of the market, and it can take like literally, it can happen like within minutes and hours now. Usually it used to take a couple days or maybe even weeks, but now liquidity can literally get on and off within like hours. And so you got to watch out for that. So this day too, when liquidity got sapped out of the market, it really didn't matter. That 50-day didn't matter. But here, look at this. As liquidity was improving, however, it broke out of it, back tested it, and then went above it. Okay. So again, I think when there's liquidity in the markets, all right, as evident by the high-low line with advanced declines in the junk bond market, I think that is how that's kind of the clue that these are more likely to work, okay? When liquidity is getting out of the market, though, I think it's less likely to work, all right? Something to consider, okay? So I think I'm going to start incorporating this as some timing and also certain risk management levels. But it's going to be based on liquidity, underlying liquidity and underlying data. If the underlying data says that it's more likely that the moving averages are going to work, we're going to incorporate it more and rely on it a little bit more heavily. When liquidity data says no, liquidity is getting out of the market, then we're going to rely on this a little bit less. Okay. One other interesting thing that I found, HYG, for some reason, the 15-day EMA is a thing. Very curious and odd. Right here, even when junk bonds did that huge, gave us that huge down signal. Remember how this was like the last day possible for junk bonds to make that bullish signal, that higher high from June 2nd on the AD line. Remember, it was not that long ago. We're on that right here. Remember, right here. Remember, I said, guys, if it's plus 25 here, we're gonna make a higher high, and that's gonna be a bullish signal for risk assets. And remember, the next day, what happened? It went minus 170 something. Remember, it was like the last possible day. That was here. That was this. Oh no, oops, that's SPY. That was this. Right here. Okay. Literally opened below, went above, closed below, back tested it the next day to the tick, and then couldn't get over it. Boom, down she goes. Same thing here, as liquidity was improving in the junk bonds market. Remember junk bonds, we were saying that, oh, we saw 4 days in a row up in early July. Remember that? Remember how we saw 4 days in a row up after July 4th on our advanced decline line in junk bonds? Junk bond liquidity was improving, so then it started respecting this level more. Okay, so when the liquidity improves, these MAs work. When it doesn't, it doesn't work as well. So that might give us a huge edge in trading, especially in this market, in this kind of choppy market. I think so. I think it's a very good chance that, this could give us a huge edge. So I'm going to do this even further. I'm going to try this on IWM. I hadn't had a chance to do this on IWM yet. And I'll try to also do this back testing even further out and see what I can find. I wouldn't be surprised if, in those momentum markets, some of the more shorter dated EMA started working. But again, I'll try to look for those data points. And we'll see. Okay, we'll see what happens. All right. Let's go over some of the other things. Speaking of indices, hedge funds have increased their short bets in anticipation of a hawkish messaging from Jackson Hole. Okay, there's something that I've noticed. A lot more puts positioning. Also, just the orders on the futures market. It just looks like a lot of hedge funds are putting in some risk-off bets on the market. So that's interesting. Okay. Generally, if we want to see huge outsized down moves, we kind of want to see the market not expecting that. Okay. So we'll see. I mean, if there is not as much hawkish messaging from Jackson Hole, are these hedge funds going to cover their short bets in mass? Maybe. I don't know. So I'm just telling you what I see, but it looks like hedge funds are increasing their bets for some sort of risk-off sentiment after Jackson Hole. So we'll see what comes of that. Okay. Jackson Hole is this week, Thursday, Friday, Saturday. Markets are, a little bit volatile for that. It's understandable that they are. Let's just take a look at some of our other indicators here. What I always like to look at, TIP, TLT, it's up. It gapped up today. It's coming back down. DBC, which is our ETF for broad commodities. Ooh, look at that. It's trying to attempt that higher high. It is trying to attempt that higher high. A lot of the gains today are coming from grains, corn up, wheat up, soy up. All these are up. The strongest of the grains look like corn. And again, we've been having some really bad weather. I called the top in corn right here, around this time right here, around June, end of June or so. I said, ooh, corn, this is the top. Only way that it comes back up here is if we have some weather-related disasters, okay? And so this heat, definitely I would consider it a disaster for farmers. They're having a really hard time. A lot of the corn crop got downgraded in quality in the past few weeks. And we'll see how they revise the corn output numbers as we get closer to the fall harvest, okay? So we'll see. I think this could surprise to the upside, it looks like. Already too, if you look at some of the meat markets are still very strong. And again, it's just getting more and more expensive to raise cows because, there's less hay because of the drought. And, futures market is pointing to a much higher cost and feeder cattle as well. So it's just all around, food commodities are just going up. Also too, what else is going up is natural gas. Natural gas in Europe actually hit some more highs as Nord Stream got shut down, I believe, for 3 days for repairs. So right now, Europe is going through another gas spike. Bless your hearts, you guys are probably going to have to pay a little bit more, especially if this heat wave continues in Europe. Here in the United States, the heat wave here is continuing as well, putting demand on power supplies. And so we're seeing also natural gas coming up here domestically at Henry Hub as well, okay, causing DBC to go up. Another, commodity, oh, look at that. We were down on gasoline, now we're coming back up. Oil's on the news, okay? There's been a huge disconnect between the physical oil market and the futures market, okay? It's a huge difference, actually. It's about a $10 per gallon difference, or $10 per barrel difference. So right now, if you go, like, for example, Saudi Arabia, when they sell oil to their customers in Asia, Europe, and all these places, they're charging about $10 over Brent. And Brent contracts are, I believe, what is it? LC1. My mind's going blank here. What was the Brent oil for TradingView? Well, whatever. Brent usually has a small premium over U.S. crude oil, but Saudi Arabia has been selling their oil for about $10 over the futures price. So because of that discrepancy, unless the markets fix themselves, OPEC said that they're going to cut production because of that. So it's sending oil markets a little bit higher. Okay, is this the impetus for that higher low, higher high that we were looking for to get back into a oil trade? It could be. It could be. And again, our plan was if we see that higher low, higher high on that dip, we buy some call spreads to 118 or so, and then we short from 120 on down. So two-way trading going on for us for crude oil. At least for me, that's what I'm planning on doing. But I don't see that signal yet. It may fail right here. Okay, I want to see it make that higher high, higher low, and right as I see that turn, that's when I'm going to buy. So yes, I'm not going to get the exact bottom, but I'm going to get that confirmation first before I get in. And I think that would be a good trade for probably October, November peak. And then maybe there we see oil come back down, possibly. That's what I will trade on at least. Okay. So that's oil. We already went over TNX. So TIP, TLT again. The reason why I went over that is because, DBC going up definitely makes this gap up. We're starting to see it coming back down a little bit, but still, it's still maintaining its breakout level here and in the lower 102s. Okay, TradingView doesn't give you like all the decimals that come afterwards, but this is a very, very large. You need a lot of money to do this trade. This is an actual trade, like the TIP TLT ratio. There's actual funds that do this, but usually it's huge institutions because it takes a lot of money to do this. But anyway, that lower 102, it looks like it's holding that. Okay. Our spreads, the 30-year, 10-year for stagflation, it's still down. I mean, with the expectation of a more hawkish Fed, I just don't see these making any meaningful moves higher. Okay, this is a 10 and 2, which is important for bank profitability. What else? As far as interest rates are concerned, TNX, which is the 10-year Treasury rate. All right, I think if it busts out of this 3.1, all right, if it just makes a new high, well, I think it tried to do that, didn't it? Almost. So if it breaks that 3.1 and starts closing higher, that is going to be a disaster for triple Q bulls. All right, for NASDAQ bulls, that's going to be a disaster. That's going to be a disaster for Cathie Wood stocks too. All right, will we get it? We'll see. Okay, again, don't take this one day move as like, oh, it's going to go back down. No, bonds tend to make a little bit slower moves. Okay, it's harder to move the Titanic than it is a small tugboat. All right, it's a much bigger market. Okay, much bigger market. The dollar, still keep the dollar ahead in your mind. I think as this keeps going up and up, it brings down the ceiling on U.S. indices. Okay. Oh, did it make a new high? Oh, it hit it. It hit it, but I think it just missed it. It just missed it. Interesting. Double top? I don't know. I don't know about that. I think maybe just like this, it could. I think it keeps going up. It just looks like it more and more. It's deteriorating. Everything is deteriorating. Like, liquidity data is deteriorating. Junk bonds, AD line, high-low line. Everything that we follow is just not showing that financial conditions are getting any better. So I think dash for cash is still in play. All right. Especially if our ZF indicator, which is our 5-year Treasury note futures, especially if this keeps going down. If this keeps going down, dash for cash. All right, dash for cash if this keeps going down, because this makes the interest carry trade more favorable for holding dollars. Okay. If it goes up, though, cash is trash, and then everybody's going to try to buy risk assets. So keep that in mind. Okay. All right. What else? What else are we looking at today? The high-low line. Let me just show you what this looks like. It still looks like this. We're now below our moving averages for our high-low line. Oh, you know what? Speaking of moving averages, let's rewind a little bit. The one other moving average I really wanted to share with you guys. I should have shared with you this earlier. Another moving average that works well is the equal weighted. And for some reason, I can't find a symbol for equal weighted SPX on on Thinkorswim. Okay, if you guys know it, please let me know what it is. All right, because I'd rather use that than this. This is like, this is just not. This is just a really bad system. But this is the only place I could find it. But anyway, this is the equal weighted S&P 500, and look at this. The equal weighted S&P 500 also has an affinity for this 50-day moving average. Look at that. Very nice. It actually hits it very nice. And so I think, okay, if SPXEW, I think if it loses that 50-day moving average, that's a sign that we are going to continue this bear market. I think so. This 50-day moving average works really well with the S&P 500 equal weighted. Works really well, and I think if it loses that, we continue our bear market. We continue that the bear market trend. We're going lower. We're going lower if we lose that, I think. Okay. So another tidbit right there. All right. As we always do around this time after this, let's go over some crypto. To my favorite crypto site. Although BZ, you showed me some a crypto site that was pretty good. GVol, I might start using that a little bit more. We'll see. Notional value coming down just a little bit. It was 7.9 billion last week. Remember, guys, now it's at 7.4 billion. Where are all the trades happening? Hey, today, for some reason, we're seeing that March contract coming back. So maybe we're seeing some block trades coming back into the market, although the August 26th also has a lot too. As we can see here, still a lot of screen trades are, primarily retail-driven trades happening. Let's see what's going on underneath the hood, though. I want to see if there's any of those March block trades. I just noticed that myself. I haven't really had a chance to look at the block trades before I did this call. So let's actually do it together. Where is my damn... There we go. Oh, I noticed there's a couple people left the pit after I started Bitcoin and Ethereum. I guess they're not crypto traders. Okay, so block trades all. Ooh. Hello. Who is this? Is our butterfly trader back? Hey. It looks like our butterfly trader is back. Over millions of dollars. Yeah. This is very much his MO. I mean, he did 10,000, 5,000, but now he's doing 1575. Maybe he's increasing his bet size now that we're lower. Interesting. Interesting. Our butterfly trader, remember, he was doing that 10,500 around, I believe it was around the 4,000 or 3,000 strike for March a couple weeks ago. Remember? Maybe he's back. Maybe it's a different entity. Maybe they're just copycatting each other. It could be that too. You never know. But yeah, this behavior is coming back at least. Interesting. And it looks like for March and August 26th are your heavy traded contracts. Let's just go. I want to go to bookmarks, and I want to go to the actual trade data and see what's going on. August 26th for this weekly Friday. Is there something going on for August 26th? Why is everybody? Oh, maybe it's just gamblers, huh? Maybe it's just gamblers. Now that the meme stocks things is over, now they're betting on crypto again. It could be. It could be. If you look at some of the meme stocks right now, a lot of them are down from their all-time highs. And if you go to Reddit, I pulled Reddit data every day to see like the comments and the sentiment on certain stocks. Actually, let's run it right now. Let me run it. You guys, here, let's run it. Let's just run it. Here you go. Run it. See, way lower comments. Remember last week we saw comments in the midday about 17, 16, 1,500 comments on the top rated Reddit stocks. Today, 233. So definitely retail, they just got like, they just got smashed, in the sell-off with their stocks, and and their high IV calls went to nothing, in like minutes probably. And so, it looks like they've found something else to do. Maybe they're in cryptos now. Could be. It could be. Okay. Ooh, Oxy is up there today. I know one of you guys took an Oxy call today. It looks like Oxy's Reddit. It's a Reddit stock today. I see where you got your trade ideas from. I'm just kidding. Maybe it's not. Okay. So, but here on the 26th, we're seeing what we saw a lot of call volume, right? Oh, I forgot. They also don't save my settings. I need that. Okay. Oh, wow. The 1,800 calls. Look at that. 11,000, way larger than any other 1,800 calls. So 1,800 calls for 2 days away, and where are we at right now? At 16 something? Yeah, okay, that looks like retail. That looks like retail. So they went now from meme stocks to ETH. Great. Wonderful. After laughter comes tears, okay? So they already had one wave of tears. They're going to go through it again. Sure, let them. We know better, though. Here at Checkmate Trading, we know better, guys, right? Okay, so that's that. Any questions? Anything anybody else want to take a look at before I go through my reviews, go through the positions, the indicators, and the trade plan that I have? Anything else you guys want to look at before I get into that? Nope. Okay, then in that case, as is tradition. Oh, wait, before I do that, okay? A lot of you guys have been asking me through DMs, what my thoughts are about certain day trades, why I don't day trade. Some of you guys showed me like some Twitter person with all these gains. Like they had like, those Weeble pictures, plus 50, plus 200, plus 800% gains. And asking me why I don't do that, especially since we have all these clear signals. We saw the junk bonds, AD line, all these things that we have that give us really clear signals. Why don't I participate in day trades? Well, here's the thing, okay? Day trading is great, okay? And if you have the time and you have the mindset for it, go ahead, okay? Just in my experience, when it comes to trading, I feel like the big gains comes from longer term trades. Okay. I will say that out of all the trading that I've done, and I've done a lot, and I've done, well for myself, probably the biggest dollar gain I've ever made is probably just buying and holding my long-term shares. Okay. Because you know why? I don't, you can use bigger position sizes for that. SPY, for example, SPY is a huge part of my net worth. All right. But I'm okay with that because I know SPY is not going to go to zero. I know, it doesn't matter at this point in my career. It doesn't matter what the price of SPY is. I can always sell covered calls on it, and I know exactly what income I'm going to get every year from selling covered calls and my dividends from SPY. So to me, the price of SPY is irrelevant. All right. And so, you're able to do that when you have a much longer time frame. All right. Yes, you may not make like 800% on a trade that is a little bit longer in time frame. Yeah, you may make less than that, maybe like 50 to 100%. But you can put more of your you can go into those positions with bigger position sizing. All right. If you make 100% off of 10% of your portfolio, that means you made another 10%, right? So that means your whole portfolio value went up 10%. If you 10%, you make 100% on that, your total portfolio value goes up by 10%. All right. Whereas, let's say you're looking for these 800% trades, because they're so high risk, you may not be able to put as much. They're probably low probability trades. You probably have to put only like 0.5% or so into a trade like that. If you use some type of like Kelly criterion or any type of disciplined risk management tool like that, you're probably going to put like 0.5%. And if you make 8 times that, well then that means you just made 4% on your overall portfolio value by putting up that 0.5% and making 800% on that. Okay, so yes, you can make 800% on that trade, but you're probably going to have to go in less, and you're probably dollar amount wise, for the same size portfolios, you're probably going to make a little bit less than that. At least that's my experience. Anytime you start positioning higher for these short-term, high-risk trades, all it takes is a couple of, it's a one bad win streak away from blowing up your account. Okay. And blowing up your account is the worst thing you can do. That means you can't continue your job anymore as a trader. That means your trading career is over, okay? And your number one job is to protect capital. So, if you are making those trades and you're doing really large position sizing on those high-risk trades, again, if market conditions change, if you have a bad win streak, and it does happen, you're probably going to lose, okay? And always be wary of people and of, I know a lot of you guys follow many different, a lot of different trading people on Twitter or Discords or whatever, but just be very wary whenever you just see people with only wins, okay? That's not how trading is. I mean, anybody who's traded more than like 5 or 10 years will tell you that, you're going to have losing streaks. It just happens, okay? And so it's not, you don't want to learn just from somebody's wins. You want to learn from their losses. And so that is why Mickey Blindside, will always be open with you guys. I'm open with myself. The most important thing is you got to be honest with yourself, right? You can't just like imagine you are something you're not. And so I know I'm not perfect. Okay, I know this, and I extensively study my losses and my mistakes so that I can fix them. Okay, and so I promise to you guys that I'll always be very upfront about that. You guys see my positions all the time. I show you guys my positions. I show you guys my entries. I show you guys my exits. And yeah, sometimes we win, sometimes we lose, but we always try to learn and get better. Okay, this is a truly, it is something what we call a practice. Okay, this is something that you work on every day. You really have to be a student of your craft. Okay, enough of that soapbox. Let's get down to it. As is tradition at the end of High Noon Highlights, I like to go over all our current indicators, our current positions, and our trading plan. And as always, we start with certain indicators. What are the key indicators that I'm looking at? TIPTLT, our inflation indicator. That's the inflation protected treasury ETF divided by the long-term treasury ETF, we can see that it's still maintaining its breakout levels. We haven't seen it go below that. It's just, I think, consolidating in that area. Which way it goes, I think, will tell us which way risk assets move. Okay. HYG making a little bit of a recovery today. Again, it's still under its 15-day EMA. This is something that I went over earlier in the episode today. It just seems to be a moving average that works. So as long as I think it's under this, I think the trend is down. Okay. Our our junk bonds AD line is still decreasing, and it's decreasing at a faster rate. So we are seeing liquidity in risk assets deteriorating at a pretty fair rate. Okay, at a pretty fair rate. So I think bounces need to get sold. That's if you're in equities, bounces need to get sold. You sell the rip. Okay, when this is going down, it's sell the rip. All right. That's junk bonds. The dollar had some losses today. It's trying to recover some of its losses. If it had gone any lower than its low for today, it would have been a key reversal day, but it looks like it won't be that. Euro USD still way under that pivot. Remember this pivot? I told you guys about this pivot a few days ago. I said if it loses that, look out below. And sure enough, that's what happened. All right. So I think more pain ahead for Europe, but we shall see. Okay. So that's another indicator. DBC, as long as this keeps going up, TIP TLT goes up. If TIP TLT keeps going up, that means our inflation fear goes up, which is it's not very good for QQQ and risk assets. Okay, risk assets are going to get hit. If QQQ gets hit, IWM gets hit, also cryptocurrencies are going to get hit if TIP TLT keeps going up. All right, so keep an eye on that. That's going to be very important. TIP TLT and also the junk bonds AD line, and of course the New York high-low line that we always look at. It busted above those two moving average, and then it just went right back down. And I think if this New York high-low line, if it makes a new low below its August 8th, August 9th lows, if it goes below that, and all the moving averages are going down. I mean, all the moving averages will point down if this makes a lower low. But if that happens, that means this bull market continues. That means that mini bull market rally that I was trying to predict that's going to come in soon, that means that's pushed off till later, okay? If this keeps going down and makes a new lower low, that means we're continuing our bear market trend. We're continuing our bear market, okay? So keep an eye on this. This updates once a day, okay? Trade plans. Bitcoin, Ethereum, still the same. I am still waiting. I am taking the patient approach. I think that is best. Really, the patient approach is the best. Wait for key levels and strike when you have the edge in your favor. And of course, TradingView likes to delete my lines. I don't know why TradingView does this. I'm going to have to give them a piece of my mind because these lines keep erasing. But anyway, I had a line here for Bitcoin and Ethereum. Hopefully it kept my Bitcoin and Ethereum line on the gold comparison charts. Let me just take a look. Let me see here. Bitcoin gold. Yes, at least it did. Okay. So yeah, we can use this as a reference as well too. Bitcoin to gold. When Bitcoin to gold gets to our red line, that's when I'll start buying and legging into Ethereum and gold. Okay. I mean, Ethereum and Bitcoin right here. Speaking of gold, gold is also part of our trade plan. Remember, I haven't mentioned it for a while because I thought, hey, it's so far away, but it's getting closer and closer to that level, that 1680 zone. Okay, I will go long on gold at 1680. I will buy some call spreads on GLD or so. Okay, so remember how I said that gold tends to make these multi-week moves. It bounces from a level, and usually a few weeks to a couple months later, it retests that level. Okay, that's usually how gold behaves. And so maybe in the next couple of weeks we get there if the dollar keeps going up, especially. So yeah, back in play, 1680. Okay, that's part of the plan as well. All right, oil. Okay, oil. Oil, I want to see that higher high higher low. When I see that higher high and that higher low, at that higher low as well, I'll buy some call spreads on USO or the crude oil futures directly. I will not buy direct futures contracts. That's a leveraged, undefined risk position. I'd rather keep it defined risk, okay? So I'm gonna be using call spreads, call verticals on USO or the actual crude oil futures itself. It just depends on what the option skew looks like for the expiration I want, okay? So we won't know that until we get closer to that position. But again, I'm gonna go long if it makes a higher high and a higher low. At that higher low, I'm gonna buy, all right? And I'm still looking to short oil at 120. So two-way trading on oil for me at least, all right? So that's my plans for oil. What else do I have? Oh, let's get back to our thinkorswim here. All right, Hut mining update today. I will want to still buy at 165. I still have those covered calls. Finally, the covered calls are in the profit now. So as this gets deeper and maybe if the sell-off gets worse, I will cover those covered calls that I have. I still have those. The January $5 strike covered calls for my Hut shares, okay? I took on a new position, as I said earlier today, just a lotto, a partial fill on a small order at 9 cents for 39.5 ARK. Okay, again, I saw a lot of sell orders coming through on some of the Cappy Wood stocks, so I said, let's put a lotto in. I got a partial fill. Let's see what happens, okay? What else do I have? Okay, so I think then now we get to our current positions. DIA still in it. The 300, 290, long the 300, short the 290. EWT, which is our EWT, which is our our Taiwan ETF. I'm still long the 49.40 put spreads. Nothing has changed. FEZ, still nothing has changed. I'm still in the November 32.27. 32.27. Some spreads, but again, I covered some of my 27 puts. Remember, like a week or so ago, I put a stink bid at 25, and I was able to get out of most of them at 25 cents. So I have a few of my 32 puts that are just naked long. Okay, so those are doing very well. Not today, but overall in the week, they're doing pretty good. So that's FEZ, IWM. I still have my IWM. Both the October and November 180, 170 put spreads, long the 180, short 170 for both October and November. And also UVXY, still waiting on that outsized VIX move. Usually when VIX pops like this, it usually comes back down a little bit and then makes a higher low and then pops back up. I'm expecting it to get to like 20, at least 27 or so, but we'll see. 1424s and also the 1520s. I'm still in the same exact spreads. QQQ, I'm still in the same exact spreads for November as well. We're up about 30-40% on these spreads, which is quite nice. However, I would like closer to max profit, which in this case we will get probably around 300 to 400% if this makes a move down. If it sells off hard, we're probably going to make like a good 300, 400% on this. Okay. So we'll see. So that's that. That is my current trade plan, my current indicators, and my current positions. Checkmate trading. Any questions, comments, rude remarks? Anything else you guys want to see? All right, then in that case, that will conclude today's High Noon Highlights. Thank you for listening in today. You all could be anywhere else in the world, but you're here with me, and I do appreciate that. Tomorrow we'll have another episode at noon, as always, noon Eastern time. I'll be around in the Discord, and as always, I'll keep our Twitch stream up so that you can take a look at the data and the charts that I'm looking at throughout the day. Trade safe, and I'll see you guys later on.